Alright, guys, this is Olanwaju Abiodun Emmanuel from Lagos, Nigeria. So, a very quick one. I'll be teaching you guys on how to, trade the financial market even as a beginner. So, if you have zero knowledge, or probably you just have a little bit of background knowledge of what Forex is all about, so I think this video is going to help you. So first of all, in the Forex world, or let me just say the financial world, we have different types of financial instruments or assets that are being traded all over the whole world, ranging from synthetic indices, currency, cryptocurrency, bonds, equities, stock indices, and the rest, options and the rest. So it's important for you to be able to choose one as a starter or as a beginner, whereby you're not going to confuse yourself, as the case may be. So basically, what I'll be doing right now is teaching us a little bit of technical analysis of what you can do and what you need to do. We know that online we have different strategies. We have the SMC, which is smart money concept. We have the ICT. We have the supply and demand, we have support and resistance, we have trend line traders, we have so many strategies online. And one of the major mistakes and pitfalls that beginners make is that they go all around, randomly checking, trying different strategies. If the strategy does not work, they change, to another strategy, and they keep on getting confused. But basically, we need to go to the basics. And when we talk about the basics, how does the Forex chart, how does it works? We do know that the Forex chart, we have different types of, we have three, or let me just say two types of market structure. We have the trendy market and we have the ranging market, or we can call it choppy market or consolidating market. Trending market, this is when traders make more money when the market is trending. And when you say market is trending, it could be moving in an upward direction or moving in a downward direction. What do I mean by this? Normally, price, or let me just say, the charts moves in what we call it in fractals. It doesn't move like a straight line, it moves in waves, giving me in an uptrend, giving me higher highs and higher lows, and in the downtrend, which is when the market is trending downwards, it gives me lower highs and lower lows. So it's not going to be moving in just one direction, it moves in fractals, in waves. And that's the reason why we tend to trade or make more money when the market is trending. And when the market is moving in a ranging position, that's when people lose more money. You understand? And if you don't know about this, it's going to hurt you as a beginner. So tend to understand this. If you know this, you know peace. Now, the way the chart moves, or in technical analysis generally, I said it moves in waves, moves in fractals. The basic tools and the basic strategy that anybody could think of all over the whole world. Forget about the fact that you have different philosophy from different traders coming with different types of strategies, CRT strategies, different strategies. That's one of the things that actually complicates traders the more. The basic knowledge that you need in Forex trading. And how does the chart moves? The chart moves in fractals, and it usually creates what we call a support, and charts will create what we call a resistance. There is nothing you want to do about that. This chart you are seeing, or this candlesticks you are seeing, it's been formed by algorithms, and the basic knowledge that you need is that it doesn't just move that way, just randomly. It moves in waves. It will create a support, break out from the support, retest the support, and keep moving in the direction that you want it to go. That's the normal what do you call it, charts is going through. Like, if you are choosing currency out of all the financial instruments that we have, probably not choose what do you call it, GBP JPY or GBP USD. That's a pair of currency that you want to trade. There's always an overall movement of each pairs. Probably it might not change in months, but there's this thing that that okay, so pair is moving in an uptrend. If you already understand that, how do you know this? That's when you now switch to the higher time frame. You see the overall direction of where the market is going. There are some pairs that have been ranging for years. There are some that are just moving in an uptrend. Like I trade commodity, which is XAUSD, which is futures. I trade gold. It has been moving for years in an uptrend, same as BTC USD. So there's no point giving yourself any headache. Look at the overall direction of where the market is going, and now you have decided that okay, this is the currency you want to trade. Know where the market is heading to. Then you know that okay, you need support, you need resistance, and majorly when the market is trendy, you can always use what we call a trend line. And there has to be rules that is going to guide you as far as your entry and your exit point. If the market is trendy in a particular position, like in a particular direction, you should be able to know that when it's going to create a support using all the tools that I'm going to show you in this video. And as the case may be, you don't need to start going from pillar to pole, going online to check different videos, because they are going to confuse you the more. And trading is very simple as far as you understand the gimmicks of what trading is all about. The only hard part about trading is the psychology, money management, trade management, and that's the most hardest part where people used to fail. So people have different strategies, but they fail when it comes to their psychology, because they don't want to lose money. And in Forex, you are going to lose money. There's nothing you want to do about that. And the most important thing is for you to be able to still make profit at the end of the day, whereby you have your risk to reward. That is maybe probably if you win your trade, you're having 1 to 10 or 1 to 5, 1 to 6. Then even if you're going to lose, you are losing twice. So 1 to 5 means that if you're risking $100, you should be expecting $500. That's 1 to 5. 1 to 6 is you are risking $100, you're expecting $600. And if you are losing twice, that means you're just losing $200. And that means you are still, if you do 600 minus 200, you are still in profit of $400. That is just simple as that. That is what trading is all about. Okay, so alright, if you look at this from my top right corner, as the case may be, if you look at my top right corner, you see where my cursor is dangling at. We have indices. Those are the types of market that we have. Indices. This is not the time to start explaining the the indices, which is stock indices. That's basket of indices. I don't have time to start doing that. Maybe in the next video I'm going to do that. This is stocks. This is futures. And this is Forex. That's currency, as the case may be. Can you see that? So we have cryptocurrency too, which is not just BTC. We have so many of them. We have futures, Forex, crypto. So many of them. You understand? All these are the assets and instruments that are being traded. And don't forget that under all this, we have so many of them. We have bonds, we have equities, so many of them, but they can't be listed here. So, and because I've chosen gold, so that's why the information you are seeing here is showing me the price of what one bar of gold is per ounce is 3,362.38 USD. And during last week, the market is closed already as we speak. Last week it moved 72.4%. So in movement, that's last week. So if you look at it, it's going to give you the full details of how any currency or any instrument you want to trade. This is the place you are going to get information about it. And this panel here, you can see this panel here, by my top right corner, this place where my cursor is, it shows the price of each gold, price per per, what do you call it, as the price moves, this what do you call it, the candlestick moves too. So, and this panel you are seeing here is where you're going to get every tool you need to analyze the market. But I have actually chosen them as my favorite, so I have all the tools that I need are here. You can actually do the same, so that you'll not be looking for it one after the other. So now let's start from the monthly time frame, as the case may be, because that is the only way you can see the overall direction of what the market is doing. Now look at it. One candle represents 1 month, one price action of 1 month. Imagine, because this is what I used to use this tactics or analogy to explain to my students, so that they can understand how the price moves. Let's assume that you are obliged to move or to trek from here to a no destination, and you move for 1 month. You are trekking for 1 month. Imagine how many distance you are going to cover. So many things are going to happen on the way while you are moving. You have no destination, you are just moving. That's how the price moves. You understand? It doesn't have any destination, it's just moving. And as it moves in the direction, probably uptrend. If it is downtrend, don't forget that I said that we have two types of market: trending market and the ranging market or consolidating market. So if it is moving in an uptrend, it is very simple for us to know that this gold is moving in an uptrend, giving me higher highs and higher lows. Now what do I mean by higher highs and higher lows? Now this point you are seeing here, that this box is, can you see this box is creating what we call a support here. Don't forget that the basic knowledge you need is support and resistance. At the same time, it's also creating a support here so that it can move. Now it's easy for you to predict when there's a support here, what happens? The price moves in that direction. When there's a support here again, what will happen? Just predict. I guess you answered correctly. So it's going to move in an upward direction. It's as simple as that. If you can't see the movement of the market from the overall trend, then you're going to be having a problem. Now, what do I mean by why do I have to go to the monthly time frame? I want to see the overall direction. So that means that every candlestick that I'm having here have been happening. If I have 12 candles here, it means that for the past 1 year, this asset, this commodity, which is XAUSD gold, has been moving in an uptrend. So why do you want to sell? Though if you move to the lower time frame, you can do what we call a counter trend, where you can sell. But this market is a buy market, so don't give yourself any headache. So as it is now, you notice that the market is moving in an uptrend now, and it has to create a support before it powers. Now this support now has become so it is a resistance here. You understand? So now this is a resistance right here. So as soon as it breaks, it will come back to retest. If you look at this, let me zoom very well. Notice that probably when it breaks, it come back to do a kind of retest before it start moving in an uptrend. That's if I go to a lower time frame, I can be able to see that. Now I was using this analogy that imagine you are just moving to a no destination, trekking, just going no destination. You find out that you will have covered a whole lot of distance, and so many things will have happened on the way. So this one candle you are seeing right here, so many things has happened. So many people have lost money. Some people have lost their lives. Some people have lost their life savings. This one movement in this whole month, 30 days, So it's very easy to say that Forex is simple and easy, but if you don't understand the gimmicks of how it works, then it's going to give you a very good, it's going to give you a kind of big problem, as the case may be. Now looking at what I want to explain to you, you notice that gold has been moving in a uptrend for the longest time, though for some part of the years it was ranging. Can you see? It was ranging, but as soon as it broke out from that ranging, this is what we call a ranging market. It's not moving higher nor moving lower. You understand? But it has never broken. Now when it was going, it has to break out, then keep moving. because it's an uptrend market. So I can go on and on and on to show you, that has been going in an uptrend. So this is an uptrend market. So as the case may be, so the price is going to go in fractals. It will give what we call an impulsive move and what we call a corrective move. What do I mean by this? That you are going to have higher highs and higher lows. I think something like this. For me, alright, so this is what the market is going to print. Anytime you are seeing that we are in a trendy market, e.g. uptrend, that is going to give you what we call a retracement. If you look at this box that I drew, look at how similar this diagram is with this. It will give you a retracement. It will come down, like something like this too. Look at this. The market is going to, give you a retracement, which we call, pullback, then give you an impulsive move to the upside, which is something like this here. Look at it. A, B, C, D, and E. Then continuation like that if it's still moving in an uptrend. Now look at it. A, I'll give you what we call an impulsive move. So I'll give you what we call a retracement, then give you an impulsive move to the upside. Then come back to retest that zone. So as soon as it breaks this, now look at this now, guys. As soon as it breaks this point, now look at how this one breaks to the upside. This is what we call a break of structure. That's what we call a break of structure. I'm going to write that here. We call it BOS, which is break of structure. Because this was a structure in the first instance. So as soon as it breaks this place, so look at a typical example by your left here, this one. So you notice that there's a retracement, then break to the upside, and the same thing that we have here. So then, and a possible move to the upside again, which is B. They come back again for another retracement to come and retest where it's coming from. In a situation whereby it breaks it back to the other side and it nullifies this structure, then that means we are no longer in a uptrend. Because I'm still going to teach us what we call using the Fibonacci retracement tool. Do you get that? So this is a typical uptrend structure, which I call market structure. If you understand market structure, you can actually make money from the financial market. So this is how the market moves. It moves in waves. So that being said, that is the major knowledge that you guys need to understand. Now let me delete this, or let me just leave it because I can still make reference to it. Now back to now we are in a monthly time frame, which shows that the market is an uptrend. Now I can move. Okay, I think I've highlighted what information that I need from the monthly time frame. Let's now move to the weekly time frame. Now I was trying to say something the other time that if you are allowed to trek for a month, look at how many distance you are going to cover. Now once we got to a week, 1 week in this place, in this sense, it represents a candle. One candle represents 1 week rather. So what does this mean? That there is so many price actions that has happened during the week. Some people have bought, some people have sold, in that space of that 1 week. So you can see that it keeps on getting larger and larger. Can you see it? So that is what it looks like. But a monthly time frame is going to give us a concise information of what has happened like a what do you call it, summarized technical analysis of what have happened in that month. Do you get that? So that is it. So now we're in the weekly time frame, which is expanding day by day now. So which the chart is expanding, as you can see it. So I'm just trying to let you understand or see what I'm talking about. You can see the chart gets bigger and bigger. So this is what that's how you do analysis. So for me, I mark out my, what do you call it, I'm going to do that, but let me just give you kind of brief explanation first, so that I'll now go back and do everything from the beginning to the end. Now let me now move to the daily time frame so that you can see another clearer picture of what we're doing. Now this is a daily time frame now. You can see that it gets bigger and bigger. One candle represents a day transactions that has happened in the market. Can you see that? So it gets bigger and bigger and bigger as we move from time frame to time frame. Do you get that? So that is what it is rather. So now I move to 4 hours. I move to 4 hours. Where it gets more and more bigger. Can you see that? Can you see that? It gets more and more bigger. Can you see? So that means one candle represents 4 hours of price action. So I'm not sure that is going to help us in any way. I'm just trying to give you a kind of overview of what top-down analysis actually do. So alright guys, so I'm going to remove all drawings so that I can now do my top-down analysis the way I'm supposed to do it, so that if you find yourself in my position or my situation, you can actually do a whole lot. So now let me go back to my monthly time frame, which I feel that is going to give you a kind of clearer picture of what the market is going to print one month. So what I'm going to do right now is mark up this place, because that's where the current price is. I don't need to do much. So I mark up. Let me just mark up this place. I'm less concerned with all the prices that has happened. It has gone. There's nothing I can do about all these ones. So even this short movement you are seeing is a very long movement in the lower time frame as soon as I progress to other time frames. So I think this is the price action that I actually need. So I've marked my support and resistance. Look at it very, very closely. So I move to my 1 week time frame, weekly time frame, where one candle represents 1 week. You can see it gets bigger and bigger. So that's how I do my analysis, as the case may be. So I'm going to do something like this too. I'm going to do something like this. So I move to 4 hours time frame. Move to 12 hours time frame. You can see that it gets bigger. Perfect. Now this is my 4 hours time frame, which actually right now for me, this is a trend line. Don't forget that we have different types of chart strategy, but basically this is a trend line that I can draw that connects the, now here is connecting the eyes because it's moving an uptrend. So this one came down to do what we call, this is what we call a counter trend. Can you see? So some people can actually see this trend and trade it in the lower time frame. You get that? But the overall picture is showing that the market is going in an uptrend. Hope you get that. But some people can actually do this. This is what we call a counter trend, and there was a breakout from that trend and a retest. Then the price keeps moving in the upward direction. So for me, I can actually still draw a resistance right here, you know, and another resistance right here, and another resistance right here. It's perfect. So now for the coming week, I'm expecting a structure, like, you know, I want it to kind of retrace down this week, create a structure, and now try to break this structure, or I wait till this structure is being broken, then wait for a retest, then target this place to this high. Do you get that? So that is what I would do if I'm supposed to trade this market right now. So this is a trend line. Don't forget I said that there are some basic, what do you call it, strategies that are in the market. The market moves in fractals, uptrend or downtrend. You must understand how to use your trend line. You must understand how to use your support and resistance. Though some other strategy talks about SMC liquidity, that if you use a support and resistance, they're going to be haunted, liquidity and all those what do you call this? I wouldn't call them trash. They actually work. That's their own philosophy, and I actually trade them too, because I understand every strategy as far as this forex market is concerned. But I decide to use what I want to use. You understand? So far you can make money from the market, no issues. So that is it. So for me, this is the 4 hours time frame. I can actually move to the 1 hour time frame to see where I can, you know, enter the market. Okay, this is my 1 hour. You can see that everything I drew, now it has created a structure here right now. Can you see in the 1 hour time frame? So I can do something like this, so I can understand what I was talking about. Now, if for you to know that my structure actually works and what I've drawn, you see that as soon as it touches this resistance zone, it went back, you know, and broke, because there was what we call volatility during the previous week, so it had to break. You understand? So no point getting ourselves issues on that. So for me, that's what I'm gonna do. So I can still move downwards to a 15 minutes time frame to see what I can still do in the market, to see what the market is doing. So everything I drew is still viable. So what I'm expecting is something like this, Do you get? This is what I'm expecting from the market. Can you see? Sorry about that. So let me do that again. So what am I expecting from the market? I'm expecting this to pull back down to this place. I'm sorry please, I think I'm having these issues with this. So can you see? So this is what I'm expecting. The target this place. So how do I target this place? I use this tool. You understand? So though I'm going to put my stop loss somewhere here, which is too large for me. So I think I think it's fine this way. This is what I'm going to target if I want to trade this market. So that is that about that. I've targeted this place from price 334.24 down to 343.21. That's what I'm going to do as far as the market is concerned. So I think I'm going to stop here. So probably I'll still continue in some other videos. All right, thank you, and God bless. If you have any questions, kindly share this post, like, comment, ask questions so I can come back to answer them.